probably extended the cycle into 2026. Not a guarantee, not yet a prediction, but is what is in my head because of the structure of the business cycle. So we can probably keep going longer, and that will still give us much higher prices to come.
Again, we're really at the crossroads now. Either we'll have a red-hot bull market, which brings us into this stock-to-flow range, or we'll see a distribution phase and then a bear market phase. And then, of course, the stock-to-flow will be invalidated, and other models are more right. But again, I expect more all-time highs in 2025. I expect higher RSIs above 80, red, multiple months of RSI 80, and I expect the moving average to curve upwards and also the realized price to curve upwards.
The past few days have been a roller coaster for Bitcoin and the broader cryptocurrency market. On Sunday, President Donald Trump took to Truth Social to announce that his administration is working on creating a crypto strategic reserve, which will include Bitcoin, Ethereum, XRP, Solana, Cardano, and other major cryptocurrencies. This news immediately sparked a surge in these assets, with Cardano soaring as much as 60% within hours. However, the rally was short-lived, as prices began to drop again on Monday following Trump's announcement of a proposed 25% tariff on imported agricultural goods, which triggered sharp market volatility. As a result, Bitcoin fell back below $84,000 per coin, contributing to a $1 billion loss in liquidations. At the time of writing, the global cryptocurrency market is down nearly 9%, with a 24-hour trading volume of $177.23 billion, marking a 13.43% decline, according to data from CoinMarketCap. Bitcoin analyst Plan B, known for his market insights, believes the cryptocurrency market is at a crossroads, oscillating between a potential V-shaped recovery and the start of a bear market. While the analyst leans toward a recovery, he acknowledges the growing influence of traditional finance players entering the Bitcoin and crypto space, suggesting the need to consider alternative scenarios. Before diving into clips of Plan B's latest Bitcoin March update and analysis, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more updates. Thanks for your support.
Bitcoin dropped to $84,000. That's minus 18% from the 102,000 in January. So the reason for this drop was the Bybit Ethereum hack, $1.4 billion in Ethereums stolen. And that spooked the market, but of course it had little or nothing to do with Bitcoin. Anyway, the minus 18% dip is a big dip, but it's not unusual for Bitcoin. Bitcoin is very volatile. Even in bull markets, we can have multiple dips that are 20 or even 30% minus. However, it was still an unexpected dip. I expected more all-time highs after January all-time high, and I expected February to be an all-time high as well, above 102,000. So we're really at the crossroads right now. Either we'll have a red-hot bull market, a continuation of the bull market, or we enter the distribution phase into a bear phase. So what will it be? I don't know. That's a big question. Was this the top? And is this dip the start of the bear market? Or will we see a V-shaped recovery and more bull market action? If we look at relative strength index, the RSI, it was also down to 63. 63 is green, so that's this green dot. Down 13 index points from 76, orange, last month. So the good news, of course, is that 63 is still above 50, and everything above 50 is uptrend. So we're still in an uptrend. But the bad news, of course, is I expected more or finally RSIs of 80% plus and red dots. That was the expectation. We didn't see that. Minus 18% return, so a RSI of 63. What seems to be the case, I'm not sure, but it looks like it, that the normal range of the RSI for normal assets like stocks or the dollar euro rate, the normal range would be between 30 and 70. So everything above 70 is overbought and will revert back. Everything below 30 is oversold and has a possibility of going back. So with all the traditional finance guys moving into Bitcoin, ETFs, etc., I think they are a little bit spooked by RSI of 70 and 76, for example, that we saw in January. So it looks like they sell every time that the RSI is above 70, 75.
In his video, Plan B emphasizes that institutional players who are not yet completely familiar with Bitcoin and the crypto market immediately sell when the market gets too heated, as their experience with traditional assets comes with much less volatility. Plan B's March update also included an analysis of Bitcoin's 200-week moving average, a key metric for assessing long-term price trends, and the 2-year realized price, which represents the average cost basis of Bitcoin purchases over the past 2 years. The 200-week moving average has increased slightly to $45,000 in February, up from $44,000 in January. While this upward movement is positive, the pace of increase is slower than anticipated.
Plan B had initially expected a sharper upward movement in the moving average, signaling stronger momentum for the current bull market. However, the 2-year realized price has remained stagnant at $74,000. Historically, this metric tends to rise sharply during bull markets as new capital flows into the market, so its flatness is somewhat concerning. Despite this, Bitcoin's current price of $84,000 is still well above the realized price, suggesting that the realized price acts as a long-term support level. If Bitcoin were to drop below this threshold, it could indicate the start of a bear market. Plan B's popular stock-to-flow model, which predicts Bitcoin's price based on its supply scarcity, continues to forecast an average price of $500,000 to $1 million for the 2024 to 2028 halving cycle. However, this estimate comes with a wide range, from $250,000 to $1 million. Plan B believes Bitcoin is at a crucial crossroads. If a strong bull market emerges, pushing Bitcoin into the stock-to-flow price range, it would validate the model. But if Bitcoin enters a distribution phase where the price stagnates, the risk of a bear market grows, potentially invalidating stock-to-flow's long-term outlook. Despite these uncertainties, Plan B remains optimistic for 2025, expecting new all-time highs within the year. Key indicators, such as the Relative Strength Index, RSI, staying above 80 for several months, an upward curve in the moving average, and a rising realized price would signal sustained growth. Real Vision founder and CEO Raul Pal, however, holds a more bullish outlook. In a recent urgent market update on his Raul Pal the Journeyman YouTube channel, Pal expressed confidence in a recovery, believing it could begin sooner than many expect. Here are clips from Pal's video.
Hey everyone, look, I know it's a bit chaotic in markets and many of you are first cycle in crypto, and I know that you need a bit of guidance and a bit of reassurance that everything's going to be okay. Listen, all of us have our lives and dreams in this whole kind of banana zone thesis. It all matters. We're all trying to unfuck our future. Let's go through how not to fuck this up. I've got the Don't Fuck This Up t-shirt on. You can now understand again what I keep saying. If you're using leverage, you are going to get blown out and you're going to lose control of your tokens. That is rule number 1. Do not lose control of your tokens. Do not use leverage. Don't FOMO and don't get fearful at the wrong points in the cycle. We have a framework. It's there to help you. We are still early stage within the final year of the crypto bull market when a lot of the big gains come. It's time not to lose your shit. Have patience. See the bigger picture. also how you construct your portfolio. I'm saying, well, 35% pullbacks are par for the course. And you're saying to me, oh my God, my portfolio is down 80%. It's because you're not using the don't this up thesis, which is you can only have a small part of your portfolio in the smaller tokens. The healing phase, who knows? Could be 2 weeks, could be a month. But the back end of March, we should start to see prices accelerate. And then April, May, June, we should see some really significant price action as the second phase of the banana zone kicks in. These phases of the banana zone, I get so fed up with people online going, where's my banana? Your banana fell over. Your banana's not ripe. Your banana, blah, blah. The banana zone is a period of time that lasts a year. It is not an instant gratification. You guys need patience more than anything else and need to understand markets. So we had the start of the banana zone. We are now in correction phase 1. That happens each and every time. Look at 2017. It's almost identical. Then, as we go into March, April, May, we start accelerating up again into the next phase of the banana zone. And then we'll have another correction. And you'll be going, oh my God, it's all over. It's all over. Am I going to die? Have we screwed this up? Where's your banana? Again, you'll have forgotten everything that went before it, and you'll be gripped with fear all over again. Then we have the final top into the end of the cycle. My view is that the business cycle is taking a long time below 50. It's starting to expand now. That has probably extended the cycle into 2026. Not a guarantee, not yet a prediction, but is what is in my head because of the structure of the business cycle. So we can probably keep going longer, and that will still give us much higher prices to come. So the game is all to play for. It is a game of don't this up. It is a game of understanding the rules, understanding to have patience, and stepping back, zooming out, touching grass, touching sand, and let it play out.
Raul Pal believes the current crypto bull market will extend until 2026, rather than peaking in 2025 like previous cycles.
The current Bitcoin cycle is marked by a combination of institutional adoption, structural demand from Bitcoin ETFs, macroeconomic liquidity trends, and the evolving role of Ethereum and other crypto assets. Unlike previous cycles that were mainly driven by retail investors, this cycle is seeing significant institutional participation, which tends to allocate capital more gradually. The introduction of Bitcoin ETFs has also created continuous buying pressure that wasn't present in past bull runs, making it less likely for the market to experience the sharp peak and crash patterns seen before, especially in 2025. Raul Pal also highlights the impact of macroeconomic liquidity cycles, particularly the Federal Reserve's policies. If the Fed starts easing monetary conditions through rate cuts or increased liquidity injections in 2024 or 2025, it could extend the rally much longer than previous cycles. He further believes that cryptocurrency adoption is broader than ever, with Ethereum's ecosystem, real-world asset tokenization, and decentralized finance playing a much larger role in this cycle. These developments contribute to what he describes as a potential super cycle, where the traditional 4-year Bitcoin halving-driven patterns become less dominant. Instead of experiencing a rapid rise followed by a steep decline, Pal envisions the possibility of a more prolonged and sustained rally, with the market potentially reaching its peak in 2026 rather than the usual halving peak in 2025. We'd love to hear your thoughts on Pal's and Plan B's analyses of Bitcoin and the overall crypto market. Do you believe crypto asset prices have peaked, marking the start of a bear market? Or do you foresee a V-shaped recovery in 2025 and possibly extending into 2026? Let us know your thoughts in the comments.